Good evening, ladies and gentlemen. How's everybody doing tonight? Tevis, Roy,
good.
how are you?
Doing good. Missed you guys last week. Was out in the desert in the middle of nowhere. Poor connections. So glad to catch back up and lots of stuff to talk about tonight.
And Tevis is back from his European excursion.
Yes, sir. I am. It's a cool intro, Steve. You should actually make that a full thing to say Fintech Friday and whatnot.
Yeah, I can only do an 8-second, but it is pretty cool. I like it.
Mhm.
Thank you, everybody, for being here. Oh, look at this. Somebody is backstage. I guess we're going to be graced with his presence tonight after all.
You're muted.
Oh, what's
There you
up, guys?
Hey,
Thought you
Dude,
weren't coming.
this Trump bomb is unbelievable.
yeah.
So he talked about this before, and it kind of just seemed like he had gone away from this news. But now that he brought this back, I think there's 1,000 things to cover about this. I don't know how credit cards even exist after this news. If people don't know what I'm referring to, he just essentially is calling for a cap on credit cards of 10% by January 20th.
Throw this up, Steve, so we can read it directly from the horse's mouth. Please be informed that we will no longer let the American public be ripped off by credit card companies that are charging interest rates of 20 to 30% and even more, which festered unimpeded during Joe Biden's administration. Affordability. Effective January 20th, 2026, I, as President of the United States, am calling for a one-year cap on credit card interest rates of 10%. Coincidentally, the January 20th date will coincide with 1 year anniversary of the historic and very successful Trump administration. Thank you for your attention to this matter, President Donald Trump.
All right. Lots to unpack there. The first thing that we need to say is we're not freaking lawyers and we're not financial advisors. So please be advised of that because we're probably going to come out with some bombs tonight. So definitely read the disclaimer, pause it, and don't make any decisions based on us.
Yeah, this is really breaking news, guys. This came out at 7:10 Eastern time. So yeah, if you're wondering if it's priced in or whatever, no, nothing really moved. Maybe
I think it was 8:10 Eastern.
Oh, 8:10, yeah, 7:10 my time. My bad.
Yeah.
So the first question is, does he actually have the power?
Hold on. Before we get to does he have the power, can you walk us through 30 seconds the implications for SoFi, Robinhood, and any other company that has credit cards? Obviously, it's pretty self-explanatory, but just so everybody's on the same page.
Yeah, so rates, if you have a good interest rate, you're at maybe 16, 17, 18%. People with lower credit scores traditionally have higher credit rates at 24 to 30%. Sometimes it may even exceed 30%. And the reality is, if this gets passed, it will tremendously impact the profitability of credit cards across the board because most Americans and most people globally carry a balance on the credit card, which is where the interest is charged off of. So you're talking about if this does happen to pass at 10% and you have a 25% average rate on your credit cards, you're losing a tremendous amount of profitability on the balance that your cards carry every month. So this would be detrimental to the banking industry and financial industry as a whole.
Yeah, the Robinhood's not really going to feel this at all. But I think, and SoFi, not really on the credit card side. I don't think that's the big concern. The big concern are the big credit card players are Amex, JP Morgan, Citigroup, Bank of America, names like this. And they do tens of billions of dollars each. Capital One just acquired Discover Financial. They do billions and billions and billions of dollars on credit cards, all way higher than 10%. So the average in the United States around 24% right now.
Yeah, the problem is, does it stop here? If this actually gets passed, this could set precedent for personal loans, and that would hit SoFi like a ton of bricks.
No, I don't think it goes to personal. Like,
Yeah, why would it set a precedent?
why does someone take out a personal loan? It's to consolidate credit card debt.
Credit card's not the only type of debt that you consolidate with a personal loan.
Dude, that is the high majority of what people are using a SoFi personal loan, confirmed by Anthony Noto. That's their main source of personal loan debts is credit card consolidation. And so this would just wipe away the demand for SoFi personal loans. Now, if you go back to the thing, the one critique that I heard is that this is only for 1 year. Why the heck would it be only for 1 year? Why would they do this, bring credit card rates all the way down to 10%, and then reopen the market for it to skyrocket back? I don't think that would ever happen. It would be, well, I don't even think it'll last a year. What I think is going to happen is they're going to say, hey, if it does actually end up going through, you're forced down to 10%, and then all credit card companies are going, okay, sorry, we can't offer anything else. Everything's going to go to secured lending, your airport lounges, your cash back, your big rewards, all of these things. Access to new credit for new individuals, gone. They can't take the risk at 10%. So,
Yeah.
Oh, this is interesting. So now we got people saying on X, the president of the United States says he's going to cap credit card interest rates at 10% from 1 year. We are about to see an all-out effort to make life more affordable for the average American. Midterm season is upon us.
Yeah, obviously.
Get ready.
Pump it into midterms, baby.
It's not going to make it more affordable. They don't have to offer you revolving credit. They're just going to stop. Like, you know what's a very fast-growing piece of the loan market right now is instant loans. Chime instant loans, cashback. The APRs on some of these things for Chime, MyPay, and all of these products, they're 30%, 40%. Some of them are sky high because you're taking your paycheck instantly, and they're essentially giving you a 3-day loan. But
sorry, why would it stop? Like, the credit card companies need to keep making money. I just think that the fees would get jacked up like all hell, because if they can't make money on the interest, they're going to make money on the fees, but they're still going to offer they still have to make money somehow. They're not just going to stop selling all of a sudden.
But you're not going to take it if the fees outweigh your spend.
And like high credit, high spenders, they still might, have something like that. But if you're below a 700 credit score, forget it. You're either getting a securitized credit card, or you're getting some terrible credit card that's like, oh, okay, well, we can't get fees that way. Give us $500 a year for an annual fee for a really mediocre card. So what'll be interesting, I saw Lakeview Fam made this comment, taking the other side of what you said, Tanner, that if there's rungs removed basically for availability for credit card, that could fuel demand for personal loans. I think buy now, pay later also, it could fuel immensely, which we'll have to see how this plays out. We'll talk about whether or not this is likely to happen and can happen anyway.
That's another one, though. That's a great example. Isn't this just going to go into a lot of buy now, pay later, and the fees are just as jacked up? But sure, it'll be transparent. You know what you're paying, but you're still going to pay a lot for access to credit. Like, if the thing is that what everyone here enjoys from credit cards is insane cash back and rewards and all of these things, and get insurance on your travel and get upgraded in your seat and all of these nice rewards, right? Whenever you have a great card.
This will be very different.
Yeah. But you're not paying for that card. It's the people who do not pay back their balance on time that's paying for that reward. Mm-hmm. Okay. If those people, like if you were just to pay a high fee in order to keep those same balances, why would we pay for cash back to begin with if we're paying, a high monthly activation fee to then, enjoy high cash back? I mean, I'm just paying to get my money back. So,
well, I mean, if that becomes a norm, if that's the only game in town, if no credit card companies will offer to you, and all credit card companies are going to raise their fees simultaneously, it becomes a moot point. It's binary. Either you do get a credit card with anybody because it's the same, or you don't with anybody.
Well, I think the real solution is going to be secured credit and debit cards, which is not credit at all. None of those solutions are real credit. That's money you already have, which for Steve, for Tevis, for Roy, for myself, that's fine because we have a little bit of discretionary, money in the bank. But for people that actually use credit cards, which is, hey, I've used up all the money in my account and now I need a little bit extra to get to my next paycheck, fronting me a balance. What's the solution there? Like at the end of the day, credit cards should be used for revolving credit. What's the next revolving credit solution if it's not going, because at 10%, they're really a lot of, they're not going to test credit cards on people with no FICO history. It's only going to be for people that they already know is going to pay back. How does someone get into a beginner credit card? That's the weird part.
Yeah, I guess through something like Sezzle that, you can do buy now, pay later and it builds your credit. But
yeah. Or
so before you
cards.
go down this path, what do we think the chances are that this actually gets passed? And what does he actually have to do to pass it?
Okay, so on the second part, I think that's the easier answer. He said, I am calling for a 1-year
Exactly.
term. He does not have authority. This has to go through Congress. There's no ifs, ands, buts about it. And I think he's using it, like many people said, as a midterms carrot, where basically, hey, this is one of the carrots we're going to offer you guys if you elect people that can get this passed through.
But think about it like this. You're now talking about private businesses. You're now regulating a private business. These are not federal credit cards. These are not federal loans. These are all privatized through companies. You are now messing with the free markets. The real question is, does Congress have the ability to pass this? I don't know the answer. I'm not a lawyer.
They can, yeah. I don't know that it gets passed, though. I think that this is probably not likely to get passed. It's going to be interesting to see who supports it. Some people mentioned Bernie Sanders. There's people on the other side of the aisle that have been calling for something like this too. So we're going to see.
Does Warren Sanders support it because it came out of Trump's mouth?
That'll be interesting too. But yeah, we're going to see, a lot of Republicans oppose this and stand against the president. And also, I think some Democrats just say, you know what, doesn't matter if it's Trump or not. This is the right thing to do. Let's do it. But I don't think this gets done at all before midterms. I think it's a carrot for after. And even then, I'm skeptical that it gets pushed. Those that would lose from this, the companies, they have a lot of money. And I know a lot of them donate towards politicians. Politics shouldn't be this way. But the reality is it is. And money does help win elections.
Yeah, I think it could definitely go through. I just don't know what the second, third order effects of this are.
So let's pose this question. Would this make you think differently about being a shareholder in SoFi?
Yeah. Yeah. I like,
Why?
it is their flagship product. This is where they make all their money.
No, it's not, dude. Personal loans, sure, but it's not moving over to personal loans. Credit card is still a very small segment of their business.
I'm talking about personal loans.
Yeah, but you're making the assumption that it goes to personal loans.
No, I'm making the assumption that personal loans are originated based on consolidation of credit cards. There's no one's consolidating their 10% credit cards to a 13% personal loan.
Yeah, the personal loan would come down.
Yeah,
with the credit card.
But that's either a huge hit or something that they, the reason why certain products have really high interest rates is not just purely greed. The market is pretty good at siphoning out greed by offering competitive rates. That's why every single time that we see an interest rate cut, all the banks don't keep their rates at the same levels. They bring down personal loans, they bring down home loans, they bring down car loans because someone else is going to offer that loan if they think it's competitive.
So hold on. So first of all, to the comments, yeah, we're just hypothetically having the conversation were it to pass. Of course, we know that it's not gonna, it's unlikely to pass, and it's very, very early days right now.
Yeah.
But if this were to pass,
well, it starts in 11 days, is what he's calling for.
Yeah, okay. So here's my question for you, Tanner. I understand the thought process to say consolidation of credit card debt, which is high interest rate, 20% plus, into 13% or 10%, whatever, personal loan is the main use case today. However, if everybody at under a certain FICO score basically is locked out of getting a credit card in the first place after this were to pass, wouldn't that be more beneficial for personal loans? Because in lieu of a credit card, they just take out a personal loan?
That's the big question. Are people going to go direct to personal loans? But I'm not sure. I think what you're going to see more is that the people who are kicked out of credit cards, which are the people who potentially have a high chance of default, where they just couldn't offer them any rate, like for them to bump up a monthly fee for a credit card on somebody that, is already on the lower end of the income stream, they can't pay the monthly fee, and they also have a high chance of default. So the bank can't take the risk and the user can't take the risk. So credit cards just disappear for them, and maybe that's good for debit cards or something like this. But on the where I think those users are going to go is into small dollar loans, which is a service that's offered by Upstart, a service that's offered by Cash App, a service that's offered by Chime. Those are not good products. They're bad for users. People will take out a small $100, $200 loan 20 times a year and not realize, because it's just a flat fee, I'll pay, $10 or $5 on my $100 loan, but I'm paying that back constantly on essentially a biweekly or monthly basis. It's insanely, these are bad products.
So if this passes, I'm pretty skeptical that it will. I did, by the way, look up Polymarket and Kalshi, just curious if something was on the predictions market yet. There's not, as far as I can tell. But HELOCs is another sort. So if it's passed, and all of a sudden there's rungs removed as far as access to credit cards, just because those change immensely, people are still going to want access to credit. So I'm curious. I think that there might be, we've mentioned some of those, like personal loans could see, even though a lot of the demand I think would be removed because the reason why they're using it, there could be some demand towards personal loans. Buy now, pay later, we talked about. A home equity line of credit would also be something that I think there would be a lot more demand for. So I'm kind of curious, that benefits Figure, and they're up ridiculously this year. Is there any other credit-like product out there where businesses in that space might benefit immensely? I mean, debit cards maybe, but it's not credit.
Yeah, HELOC's interesting, but then you're only targeting people who have homes.
Yeah.
Can't you get a line of credit as well?
Yeah.
Right, because I have one of those. I don't tap into it. I use my credit card all the time. But if I didn't have my credit card, I would tap into it more often and just pay it off.
Yeah,
I don't know how accessible a lot of those tools are to different classes of FICO scores.
And they're also priced extremely differently, not just because a dollar is a dollar. The reason why they're priced so differently is because of the time length of these loans. Like credit cards, they can have a 24% interest rate, but no one has a 12-month credit card loan, or at least that's not the way they're designed to have that loan. Maybe you don't pay your credit card back and you pass the date of what you're supposed to pay by 2 weeks, and then you go, okay, I have money, I'll pay off my loan. You didn't pay 24%. You paid a fraction.
Tanner, most people keep a recurring balance on their credit card.
I know, but those people still are not going to be accepted for other types of credit. It's not like we're opening up our credit lines.
They're going to have their credit cards canceled on them.
I think that the terms of these credit cards are going to change drastically. Huge monthly fees. The small thing that we just talked about with SoFi credit cards, that's going to happen to every person that owns a SoFi credit card. They're all going to get charged $10 a month.
So here's the big thing. If we game theory it out, we know that Trump wants the market to do well. We know if the market does not do well, even though should not be an indication of the economy, most people take it as is. And if this goes through, it's going to seriously impact the financial industry, which is one of the largest sectors of the S&P. And they got to take that into consideration. I don't know that they're really going to call for this. I mean, somebody inside the administration's got to be saying this, that if you do this, there's going to have dramatic ripple effects from the big banks to the credit card companies to lending companies.
Yeah, I would not want to wake up on Monday holding Amex or especially Capital One. Capital One is a credit card company.
Yeah.
I mean, would you even consider getting out of SoFi on Monday?
No, because I don't think it's going to go through. Like,
assuming it did.
I mean,
okay, throw this up, please.
It would be a bad day.
I don't know who said it in the comments, but they were right. I wanted to verify. Bernie Sanders called out Trump, and that's probably what did this. So he said, Trump promised to cap credit cards, 10%, stop Wall Street from getting away with murder. Said he deregulated big banks. The result, Jimmy Dimon made $770 million, unacceptable. So yeah, it looks like he said
that at 2:45.
Yeah. So it's today. So he is likely doing this in response to being called out for not keeping one of his campaign promises. Yeah,
I remember him saying that, and that was shocking, and then it just went away. So like everyone, didn't worry about it again.
I just think what would happen is like if you were to game it out, right? To Tanner's earlier point, the banks or the issuers of the credit cards lose money on the high FICOs and they make money on the low FICOs, or
correct.
Maybe not FICO. It correlates to FICOs, but realistically on people who are consistently paying off their credit card, and they make a lot of money on people who have a revolving balance and don't pay it off.
Yeah.
Realistically, what would happen is not necessarily that they would stop issuing credit cards, it's that they would stop issuing credit cards to lower FICOs, and they would make less money on the spread, but with people that have a much lower risk of default.
Yeah, they would offer credit cards to only the elite people who are not getting charged any amount because they pay off their credit cards on time. So essentially, what happens is it's not, hey, we're going down from 24% interest rate to 10. You're essentially going from 24 to 0 because the people who they can offer this 10% to are not paying it. So how do you offer the cash back and the rewards and all of these things?
You don't, unless you're doing an American Express model where you have to pay X amount per year to hold the credit card.
Yeah, and you would severely limit the total of the credit card. Like it would have $1,000 cards or something like this. You wouldn't have what is it called? The credit limit. So you lower the credit limit, increase the fee. That's the only way. But realistically speaking, over the midterm, you would price out all of the below 600 FICOs out of the market completely of credit card, which is arguably way worse for the economy, quite frankly, because you force them into worse options.
100%. 100%. That's why, this could be more broad sweeping than this, because I think there's worse credit products than this. Go after the payday money lenders and all these, go after the go easy financials that are charging people egregious rates and not teaching these people how much they're actually paying. I was a financial advisor. I had a conversation with someone early on in my career. He thought he was paying a 3% interest rate. He was paying a 32% interest rate on a $10,000 loan. By the time he had to pay back the loan, it was over 22 grand or whatever. Like he paid more back than what he borrowed by more than double. So it's I think that this is an education problem with credit cards, not necessarily just the dollar amount of the interest rates. There's underwriting that goes into these credit card problems. We're not just, the banks didn't come together and decide a big rate, or else you would see a Robinhood or a SoFi or some of these companies that could undercut them, but they can't. They all choose similar interest rates. And it's not out of greed. SoFi's been losing money on their credit cards for years and years and years.
Presumably it's a range, right? Under 10%, and it's not worth it to even offer credit cards for the credit card company to, even 700 FICOs, between 10 and, 13, 14%, so on and so forth, and all the way up to 30% of where we are right now, right? You have credit cards that are between 22 and 30% roughly. What is that sweet spot where the credit card companies are making enough of a profit that it's worth it for them to keep status quo, but not so much where they're gouging their customers where it is right now?
15 to 18%.
Right.
How do you know that?
Well, my point is it's a number higher than 10 and lower than 30.
Because most credit cards do not have a 30% rate.
No, but like here, I was doing a look at this really quick. Lending Tree ended up putting out this great thing. Average credit card interest rates in December. Let's go ahead and look at this. The average interest rate across is about 23.8%. Now, if we go through and we look at something like low interest rate credit cards, the minimum APR that here, I'll just sort it this way. The minimum APR that we have on low interest rate credit cards is 13%. There's no one offering even 10%. Where did we get this number from? You're telling me that they're all in cahoots. Every single one, no fintech. Like we've innovated away on buy now, pay later. We've innovated away on APYs on checking accounts and zero commission trades and everything, but no one's tried a new credit card. Of course they have. Robinhood would have tried that. But it's hard, and people don't pay back their cards. And by the way, you're not supposed to keep a credit card revolving balance. If you miss a single payment, sure, you end up getting hit, and then that amount that you miss by a month, by a few months, that's what you should be charged. But because people keep a revolving balance, this egregious 26, 24% seems extremely high. But it's only supposed to be a slight hit.
Yeah, but you're not going to change human behavior, right?
Sorry?
You're not going to change human behavior. Like, people are going to sort of draw that out to the max. Like, I understand the incentive.
I mean, Trump is trying to change behavior here by capping a limit on underwriting. And
it would definitely change that.
Like, how does he know what it is to underwrite a credit card? Mm-hmm. SoFi wasn't making money at 24%, let alone making money at 10.
Yeah, and they just started charging some $10.
Yeah. I don't know. Like, but the companies that do get it right make egregious sums of money. And that's the problem, is there's no middle ground to this product. The big banks are getting filthy rich, and the new entrants for credit cards are few and far between. Yeah, but you see a whole lot of payment companies. You don't see 1,000 credit card companies.
There's more than enough credit cards out there already. You don't need more entrants.
It's not that, man. It's like, how can you make a unilateral change to just one thing when you have so many other complementary offerings that are basically the exact same thing? Buy now, pay later, like all of these payday loans, so many different permutations. And at the end of the day, it's like usury by another name, right?
It's a simple answer. Just about everybody has a credit card in their wallet, whereas not everybody has a buy now, pay later or a payday loan. Credit card is the most universal tool. So it's easy to get a win off of that.
So for me, I'll definitely be thinking about ramifications, but this is a post-midterm problem in my mind. The market won't act like that on Monday. The market's going to do what it's going to do. It's going to slam Capital One for sure, American Express. To a lesser extent, they'll probably hit MasterCard and Visa, although that's more a payment rails play than a card play. It still does have an impact. Them SoFi might get caught up in it, but the reality is, this is not. I'm extremely confident this is not going to pass before midterms. It has to go through Congress. Two reasons why. One is a lot of Republicans would oppose this, and second, the Democrats, while they might want to see this pass, they're not going to want to give Trump a win before midterms. They will not. And so this is not going to really even be decided on. We might see some comments, for and against, so we can kind of see what that might look like. But yeah, it's not happening.
Yeah, but it doesn't matter if it happens or not. The thing that matters is it being in the narrative, because a lot of investment is narrative. So is this going to become a black cloud just when things were starting to go good?
I
I don't
mean,
think
I
so.
don't think so, because like Trump throws out some of these bombs. Like he throws out multiple a week, man. Like he threw out the defense stocks, buybacks and dividends. He threw out like the homeowner thing with private companies buying homes. Like that was just this week. Those are three bombs, right? Three game changing things. Every single week, it's
Well,
going to be multiple
Fannie
different.
and Freddie spending 200 billion would be great.
Right, regardless of the merits of the individual news pieces themselves, my point is the volume of the groundbreaking news pieces will make this pass really quickly from the sort of news cycle.
Yeah, I mean, I don't know. So I hear from some people. I even see Lakeview in chat. He says this is insanely bullish for SoFi. I'd like to know how. I mean, personal loans had gone from being issued 7 days to now being issued same day. But I really think that what the lower end consumer is using credit cards for is filling the gap between their paycheck to get to their next paycheck. We have to remember, people live paycheck to paycheck. So they need a little bit of credit. They're not going to pull out a $5,000 personal loan to fill gaps in their paycheck. I mean, if people were that forward looking, then they would, I don't know, not have revolving balances in the first place. I think the reason why people do is because they're not forward looking with finances, and education in this area is low.
Yeah, it'll be really interesting to see how this evolves. But yeah, there's definitely some winners and some losers. I think it's too early to sound alarm bells, but the market might have some noise. Tevis, I think to your point, there's bombshells like this issued all the time, and usually these are pretty quickly forgotten, like within a week. So yeah, that's just the way I see it for right now. After midterms, it may be very different. We'll have to see what people are saying leading into that time.
What do you guys think this could mean for names like Upstart, Chime, and Cash App?
If it passes, you mean?
Yeah. Chime doesn't have a single actual credit card. They have secured cards, they have debit cards, they have instant loans, and they have forwarding for I mean, it seems designed for them, honestly.
If the market is selling off on this news, like in that space, Chime will temporarily be caught in that. And if you're interested in buying Chime, that might be an opportunity to buy the dip. Because short term, the basket stuff happens, and then long term, it's like, oh, Chime isn't actually impact. You see that time and time again. I think that they're positioned pretty well. Affirm likewise, I think, is positioned very well. Sezzle too.
So Sodak Zach said something that I saw on Twitter as well. He said, the last time SoFi had to pivot, they did insanely well. It's not about does this hurt SoFi, it's does it hurt everyone else bigger than them, and SoFi can pivot with better margins. But no one's saying that you have to hold financials. Like, I think the question this is an open stock market. What would you rather be in? This area where credit cards are taking a hit, or would you rather just pivot your portfolio into Nebius and Meta and Amazon and all these names?
Yeah, the reality is that this is a situation where even if it doesn't impact SoFi from a revenue and EPS perspective, this could be a black cloud from a narrative perspective for the entire financial industry that SoFi gets caught up in, even if it doesn't necessarily impact their quarterly numbers. And there could be significantly more ROI just going into a different area of the economy, such as, like Tanner said, a Nebius, or for me, buy more Nvidia, Meta, Amazon. It's just, I can't game out because this could change tomorrow. It could change Sunday, it could change Monday. But if they double down on this could be problematic heading into earnings. And here's the bigger thing. What do all the banks say in a week and a half when they start reporting with this on the front end of earnings? They're going to have, if Trump does not retract this and this picks up steam heading into earnings, every one of the big banks has to address this. They all report before SoFi. Like this could be problematic.
The thing that throws me off is the date associated with it. Like, if this has to go through all of the hoops that it actually does, that we know that it does, then what is that hard date? And realistically, what changes there?
Well, I'm just. This feels like almost like who was that person that worked for the Fed that Trump fired and then she went back to work the next day? That's what I think is going to happen. Like, what's JP like? If JP Morgan and all these guys just they're like, no, like,
Yeah,
I don't know. You put out a tweet that make it law. Like, I
even I'd have to look into this part too. Is like this might even need to be done at the state level versus the federal level, which would make
We
it
need a
even better.
lawyer to come on to talk to us.
Yeah,
Is what we need.
Only we
need a
knew
lawyer
one.
in chat if you want him in here.
I mean, I think we bring him on. I think he comes on if he's able to.
Honestly, yeah. If you have an opinion on this, Tim, you want to join us, we'd love to hear it because we could use a little help here. This is just
We would love for Tim to come on if he's available for a little bit.
By the way, I for real don't even think this goes through.
No,
I'm just saying
nobody does, dude.
why I would be concerned if it did.
Yeah, no,
But it's not just about it actually going through. It's about the carnage it can cause
He said
up
send me a
until
link.
that point.
Yeah.
Okay.
Tanner, can you send him a link?
Yeah.
Thank you.
Yeah, I saw some people asking like if this would be a good thing for PayPal or not. I'm like, I don't know. Yeah, they like they're kind of like SoFi in a way that like some of the products that they offer would obviously benefit immensely. Buy now, pay later, which are certainly building out. Venmo, they've been issuing a lot of PayPal debit cards as well, omni-channel payments too. But and then they have some lending products, but those are more geared towards a working capital for merchants. I don't know.
By the way, there's someone saying I'm completely wrong because SoFi doesn't have low FICO users. There's a difference between SoFi's personal loans and SoFi's credit cards. The average credit card that SoFi has is a FICO under 600. So it's completely different.
Yeah.
Don't just use the broad, a basis of the 740 of personal loans. They're two different segments. What percentage of SoFi's revenue is credit cards? Extremely small. That's not what I'm worried about. I'm worried about personal loans because they consolidate credit cards.
And related to that, like it's not just SoFi. Remember, Blue Owl, Fortress, Citadel, so forth. They are getting a lot through the loan platform business of SoFi. So through the personal loans, what's hitting them, would also hit SoFi, or what's hitting SoFi would also hit them. And so they would get hit both on the credit card front, but also or personal loan front, but also on the loan platform business front. So still good, solid company, but we don't know.
Is Tim backstage, by the way, Steve?
No,
Gotta handle all that.
not yet.
Okay. Someone said existing cards will not be impacted.
That's
can't-
not the way that reads.
Yeah, that doesn't make any sense.
This is not for any new cards. This would be wide sweeping for everything.
Yeah, that wouldn't win any votes in any discussions in the midterm if the existing billions of credit cards existing didn't change it at all.
Can you imagine you just get grandfathered in? All these credit card companies magically have to lose money now on everybody.
Well, that's how I think it's going to happen.
Hey,
Good evening, Tim.
Hey, welcome.
Can you hear us?
Hello?
hey,
I don't think you can hear me.
So,
you
Tim,
hear
what's your take on this?
So where are we? What's the discussion? I mean, I heard a little bit of it.
We're talking about this 10% credit card change. If this was to go through,
Well, hold on a second. Hold on. Wait.
You got my audio? swear Tim's got a different setup every time we see him.
Yeah, as Tim is figuring that out, Tim actually is a lawyer. He's not a constitutional lawyer, but he knows a little bit of something about this, and which is why we wouldn't have him on. So,
B-Dubs said that Bill Ackman talked about this. Let me see. Okay.
Tim is frozen.
Okay. Bill Ackman said, this is a mistake, President Donald Trump. Without being able to charge rates adequate enough to cover losses and to earn an adequate return on equity, credit card lenders will cancel cards to millions of consumers who will have to turn to loan sharks for credit at rates higher than or on terms inferior to what they previously paid. Exactly what we just said. That comes from the May I See You man himself. May I meet you?
Tim, how are you?
I'm fine. How you guys doing?
Good.
First of all, I don't think it has a chance of passing, to tell you the truth. I mean, it would destroy available credit to probably anybody with a FICO score under 730, 750. So
yeah,
it's not a thing to do. That being said, you guys all know I was a proponent of them charging lower rates on credit cards and make effectively the credit cards of the future be secured by everything as a way to steal the high level customers, right? So, like for example, I don't ever keep a revolving credit card balance ever because I have the money, but occasionally I have the Citicorp product that gives me, you pay a 5% fee and you have it for, you can borrow as much money up to whatever your credit limit is. I have pretty high credit limit for a year at 5%. And they make money on that product because they know I'm not going to default, and they know I'm probably not going to keep the revolving balance for the whole year. So the 5% becomes even a higher rate.
Right.
So there's a lot of room for that type of product, and still have personal loans refinanced. But I just don't think they can do it on a global basis, which makes it an advantage for SoFi to do it not on a global basis, because it would take the pressure off the other banks and to charge lower rates, because there's an alternative, and that would be SoFi would be that alternative. So that's always why I push that. It doesn't make any sense to basically eliminate credit for everybody making below $60,000. It's just not going to happen.
Then you're stuck with a lot of people going, like Dave would be a name that would benefit immensely from this. That's an inferior credit offering.
The people that would hurt is everybody who's lower income that has a credit card, because they'd just be gouged at that point.
There'll be a lot more people getting charged $10 a month.
Yeah, that kind of looking into that, it's like my son actually got his credit card notice on $10, and so I looked at his activity, and he the only thing I can figure out, because I've looked at a couple people's activities that they've DM'd me, and I've asked them a list of questions, and I think, I just sent a post on it, kind of funny, and I've also sent the company in some notes that it has to be way more transparent on this. It's because effectively, like for my son or these other people, my son never figured out how to claim his rewards, because he said, I didn't know I even got rewards, Dad. So I didn't know if that was an issue. But he just uses it for everything and pays it off. So if the idea to get your money right is you have to maintain a credit card balance, that's kind of contrary to getting your money right, in my opinion. Nobody's ever got their money right by maintaining revolving credit card balances. It's just not, it doesn't happen. But if the rate's at 10%, it'd be different. But I think they need to do a little bit of soul searching on this, and some better communication, because you really don't want to spend $10 a month for your credit card, then get SoFi Plus for $10. And now you're spending $240 a year for a credit card you got for free last year. It makes no sense whatsoever. I mean, I'm pretty disappointed in it. I think Noah's got to be pretty disappointed in it. And frankly, I've always in my career never fired anybody, because I always think there's a better place to put them, and you put anybody in the right place and they succeed. But I think it's time for them to look at the advice they're getting on this, because it's not customer friendly. I mean, I've even had contact with a couple people who have their credit card taken off that has hundreds of thousands of dollars in their invest account. That's not a great idea, right? You know, one-stop shop. The reason I like that credit card is I can go on and look at my investment account, and I can look at my banking accounts. I can transfer funds to pay my credit card, and I don't keep any balances either. So I don't myself care about the $10 a month. It doesn't really, in the scheme of things, I just pay it myself. I told my son, just pay it, don't worry about it. It's the convenience, but they've got to get their credit card offerings, instead of piecemealing at everything. You know, they piecemealed everything and they said, okay, well, the smart card is this, and everybody goes, well, that's a premium card. They can't just come out with a credit card that looks like it's going to be a premium card for the lower end, but not the higher end. They got to put a chart out and let everybody know what the ecosystem is going to look like, and they have to plan that more properly. But this could be an opportunity for them, because if they said, well, if they already said we have a 10% credit card, if you have so much money invested in this, they could take advantage of the situation where this law is not going to get passed. It's just.
Yeah, I wanted to quickly state, because you said that there's still room, even at 10%, to consolidate to personal loans, which I agree.
Yeah.
But that would highly impact, guidance going forward. If we thought, maybe the average rate was going to be around somewhere around 12%, and now we have to bring that all the way down to maybe nearly half. Right,
but it assumes that the law passed. I mean, I think you're right. I think they have a problem if the law passes. I think that's a problem, because they're not going to have much to refinance. So you have to replace that with 10% credit card debt and have people like me borrow money who are going to pay it back. And that's kind of they have so many personal loans. There's so much opportunity for all that debt, whatever trillions of dollars of debt there is, to be able to refinance. That's their opportunity. But if you can only refinance it at 10%, I don't even know how big banks could compete on that. So it's like very difficult for me to think of how that actually would sort itself out. It would be a pretty much so much uncertainty in the financial sector. It wouldn't be good for any of the financial stocks.
And going one order set beyond, a lot of consumer spending is by credit type of products, including credit cards, especially. So you could see the velocity of money go down substantially as well as a result. So even if you're like, hey, I'm not in payments names, I'm fine, maybe you won't be.
Yeah, it's I don't think it'll pass. I think it's an opportunity, and I think like I just posted something. I said, it's time to iterate your credit cards and get this right. It's too piecemeal, in my opinion. Too not enough thinking of how it affects your customer. Not enough thinking of how to roll it out and always have a no. You always have, when you have a business and you have customers and you have a big existing base of customers, the last thing you want to do is charge a fee or something that doesn't give somebody a no fee opportunity, right? You want them to have a no fee opportunity, or you allow it to keep it for 2 months, but it doesn't. That's not the opportunity. So for example, say I don't want to pay the $10. I now no longer have a credit card in their system as part of my one-stop shop, right? It's kind of counter thesis, right? Doesn't make a lot of sense, but I'm sure they're getting enough, I don't know, backlash or commentary that they're looking at it.
I mean, he always does this, though. I mean, this is the playbook all along. He throws out this outrageous, salacious, headline, and then he slowly walks it back into something that's more reasonable. So I don't think we should be thinking that this time is any different.
Well, that's Donald Trump. I don't know if I told you guys that. I can't say how I represent, but I did used to represent Trump, so I know his activities pretty well. Yeah, he likes to like some plaintiffs' lawyers demand $1 billion when they only want 100,000, and sometimes that works, and sometimes it works effectively, especially with people who don't have the wherewithal to fight back. But this, I think, I forget which one of you said it. Maybe many of you, Steve and Tanner. It's his way of basically jacking up the midterms, trying to get the midterms effectively skewed in the Republican direction. But
But do you think that
the
he
more
had-
reasonable next iteration that might happen, Tevis, because we have seen this pattern, is maybe tying the capped rates to a multiple of the Fed's fund rate, which would do a couple of things. One is, it varies depending on conditions that are out there. The other thing that it does is it also puts pressure then on the Fed governors, or at least in Trump's mind it might, because it's like, hey, you guys need to lower, so it benefits all these guys that are holding credit cards. And if it's like a multiple like 6 or 7 times, you can still make a credit card work at 20%. 10%, that's tough.
Well, 10% is tough unless you absolutely have no defaults, right? You have no defaults and it's secured. I mean, that's why I always say you secure the low end of your system, you secure the high end of the system, and you can effectively bring your average default rates down. And that's the only way you can do it. But you can't offer it across the board, because if they have passed a 10% rate across the board, forget about having your rewards. You won't have any rewards.
Yeah,
And
like SoFi was sporting, over 16% defaults on their credit cards. Like, I don't even understand how a new company that's trying to like get to grips with underwriting even handles 10%. Like, there's no margin.
yeah, that's why you wouldn't give it to anybody without like a credit score under 750.
No, I know, but then that takes the market. That takes away 80% of the people that have credit cards.
Right. That's the thing about it is the rates have to be lower. They're just the credit card rates have to be lower, because it's even Noto has suggested in some of his his interviews, he said that credit card rates are too high. They're just very too much high. He said it like several times, which was encouraging to me. But you can't ever get ahead if you're poor and have a credit card that pays over 18%, maybe over 16%, because it's just going to kill you over time.
Yeah,
I mean, just think of the compounding you'd like to have. If I said, okay, all you guys take all your money, I got you a guaranteed 16% for the next 5 years. I don't know who wouldn't take that deal.
You know what though? But this is why I think the free market's trying to figure it out. That's why SoFi's personal loans have been so successful.
Right. That's right.
A competitor came in with a product that solves this solution, and it's just not very popularized right now. So they're only doing $7 billion, but the loan platform business with more education, that's what should be part of this bill is let people know, force people to understand what the APRs are. And whenever they're about to not pay it back, let them know the actual dollar amount. A lot of people just with the percentages that it doesn't compute, right? You tell them you're now going to tack on an additional, X number of dollars that you have to pay the bank just because you don't want to pay this on Monday. People think that minimum payments on balances, like this is a solution to their problem. That should just be wiped away. You should pay your balance.
Right. That's the education. That's the education part of using a credit card, right? And that's why
that should be regulated. Like,
yeah.
Steve, can you throw this up real quick? People are wondering who this guy is that's talking. This is Tim Sweeney. He's got an X account right there. You guys can follow him. And I think, if you're in SoFi at all or in this space at all, he's a great guy and oftentimes knows things. He's a go-to for a lot of things that we ask about. So, yeah.
Yeah, I actually think, SoFi is in a unique position with regard to credit cards, and I've said it over and over again, to basically change the system. And I don't know if it's a 10% rate or if it's a 12% rate, or if it's a 17% rate that you start out and you can grow into a 10% rate. If you have an ecosystem which shows people which actually fairly regulates people into how to manage their credit, you're going to have better customers, right? And that's kind of what I always said they need to do. But people are reluctant because everybody wants bigger rewards. They just don't realize that if they're maintaining a balance, they're paying their own rewards. They're paying more than their own rewards. And they're like, my brother who's passed away was like that. He goes, "Oh, I got like $100 in rewards." I go, "You paid $1,000 in interest." I mean, but the reward systems, people are so into those. To get rid of those would be political suicide. So this is never going to pass.
Yeah, I don't think this is going to pass.
The question is, does this create a black cloud that needs to be answered in Q1 by the big banks? And does this impact SoFi?
Well, I think the big banks, they're going to have to say something, right?
Yeah, we got earnings in 2 weeks.
And I used to write these things for people, like answers to people for, inquiries on and earnings calls and review those and write them. And I don't know what I'd write for a big bank, to tell you the truth. I know what I could write for SoFi, but I don't have any idea what I'd write for a big bank. It's like, yeah, we're screwed. I mean, JP Morgan Chase would be the only one with left credit cards because like a lot of their credit cards are subsidized by the travel. Like their airlines card is subsidized by the American Airlines, for example, will help pay for some of those rewards by giving miles. So they might be the only one left standing that they could say anything. But Wells Fargo and Bank of America, I don't know what they would do.
I honestly think it's I don't know this to be sure, but I would assume it's the other way around, that JP Morgan is subsidizing the travel companies by getting more.
I don't think that's true. I mean, I'd have to look into it. I read something or talked to somebody I know in the industry, and they said that like the American Airlines is helping give some of the miles. But it's like, especially with the travel cards, those are partnerships, and I doubt seriously whether those because it's very easy for an airline to give you more miles because it's giving you a discount on a flight. And
I know, but why would they give you? Why would they give you miles and have to pay JP Morgan to do that?
Well, they don't have to pay JP Morgan anything. They just have to participate by giving a share of the miles.
I need to correct myself. Big bank earnings are next week. JP Morgan reports on the 13th.
Yeah.
I pretty much think they would say it's not really realistic. Same thing we're saying. It's not realistic. It would destroy our credit we're giving to 80% of the people that need the credit, et cetera, et cetera. Those kind of push it off because that's what we're doing, right? Because it's not a serious thing.
Well, what do you guys think about what he's done recently with pharma? Like, I mean, he's made a lot of changes there. They're big lobbyists, and he's still pushed through some regulations.
That's kind of the opposite. And he's trying to cut costs for the everyday person for pharma. He's trying to cut costs here, but the effect of
that hurts those companies.
But you're right. But the effect, I don't think Trump cares if he hurts a company. I mean, that's just him, right? He doesn't care if he hurts a company. He cares about his political future and the future for the next couple of years. But I don't think he's going to. I don't think it's the same because you can't take credit away from people like that, and the banks won't give credit at 10% to a huge majority of the credit card holders. It just won't happen.
Yeah,
even for a year.
Yeah, and like what's going to happen after a year? It just jacks right back up. Like it doesn't make any sense to me.
Well, if it goes for a year, you're going to have trouble not extending it. That's the whole problem. Right? It's like when any company gets like greedy and they say, we're going to start 33%, 34%. They go, look at all the money we're making. And then somebody comes by and says 10%. The banks go, no, 33%. And that's the whole reason I thought if you could do it and bleed off the upper half and the lower half and have it secured, get rid of your default rates. I mean, the personal loan rates are 12% about effectively for SoFi for the most part. If you could do it, say you could do it at 12% credit card, and you had no defaults or very little defaults, it's workable for them because as an isolated company that's offering it versus somebody offering 33%, you could steal members right and left all day long, right? And you're going to steal the cream of the crop. You're not going to steal the 80%. You're going to steal the 20%, which is really their model anyway at the upper end.
Yeah. I don't. Yeah.
But I think Tanner's right to some extent. Secured cards at the lower level, people are getting more educated, and they're going to realize that if they can get any kind of 1% reward on a secured debit card, or credit card that acts like a debit card, but that's probably what lower income people are going to do.
But that's not credit,
right?
Like where that builds credit. But how are people going to access money in quick order that they don't have in their bank account?
Well, at 10% limit, they're not going to be access because it's not like the 10% limit won't apply to Dave.
No, but I completely agree. And so that's what I'm saying. What does this do to the general economy? Like if the average person can't get access to credit, does shopping slow down? Does spend slow down?
Of course it does. It's a disaster.
This is not going through. Like
it's not going through.
Is going to think that this is a good idea. The American economy runs on credit.
Dude, it's just a populist promise. And like, even if he wants to drag this out, to go through. Like, first of all, he put a 1 year limit in his tweet saying he's going to do it for 1 year, but midterms are around the corner, right? So even if it's not dead on arrival immediately, and this gets, a couple of committees to talk about the repercussions, this and that, midterms are done, and then it gets forgotten. Like, it's never going to go through.
Well, here's how Trump thinks, though. I'll throw this out at 10%. I'll get credit for it. Then if they get to 18% or they say 21%, I'll take credit for a partial win. That's the way he operates. It's, he overshoots, and then, something gets resolved and he takes credit for it. That's what he's hoping to happen. He's not a stupid guy. He's a smart guy. He knows that 10% is not going to work.
If you came out and said that this was going to cap at 20%, I'd go, oh, you know what? This, like, it might be bloody, but that'll go through,
Right. Even 22. I mean, there's 30. I mean, there's cards that are 33%. If you owe any amount of money at 33% and you're making the minimum payment, you're going to go to bankruptcy. And it's kind of the concept. Like I used to tell companies, if you charge me 26%, you're going to have a lot of defaults. And you say, I have to charge 26% because I have a lot of defaults, but you have a lot of defaults because you charge 26%. You wouldn't have as many defaults if you charge 6%, right? So as an egregious example, but that's kind of the thinking with banks is they just say, we have to charge this because we have so many defaults, but you got to model out and see how you reduce your defaults. Because if you can reduce your defaults, you can reduce your rates. But it's a drug for the big banks. It's not right now a drug for SoFi, which is the good news for SoFi. It's not a drug for SoFi. It's a drug for a lot of big banks.
Let me ask you this, because I think Tanner and I may disagree on this a little bit. Tanner stated before, and he believes SoFi's personal loans would take a hit because the majority of it comes from consolidation of credit cards, paying them off. I'm not so sure if personal loans will take a large hit because I still think a lot of people take out personal loans for other things other than paying down high yielding debt. Do you think that this would really impact personal loans from SoFi?
It kind of has to, right? I mean, even if it just if everybody can only charge 10%, and so all the banks now only charge 10% on their balances and for all their credit card debt, the 1.5 trillion is a 10% limit. You're not going to get many personal loans at 12% to refinance that, at least not for the year it's in shape. You'll get other personal loans, but the question is the 1.5 trillion of credit cards gives them such a vast pool of amounts of money that they can actually draw from, because they don't have to refinance the 1.5 trillion. They can just take on the margin whatever they need. And that margin, even if people would say, okay, I'm going to refinance this anyway to get better terms or payments, or the rates go down and they can do 10%. If it's 10% there and 10% for SoFi, you could get some, but you're not going to get. It's not going to be the same pool that you're taking from. I think, but you will have other personal loans. But I just don't know with the volume of personal loans they have. Anytime you have a business, your personal loans can't go up. You can't do that forever, but you can when there's $1.5 trillion of debt that's at 28 or 30%.
So let me ask it this way: if hypothetically, game it out, if this gets past to 10%, does SoFi's personal loans then take a hit because now people can just put it on a credit card and basically get the same rate that they would get from a personal loan? And it's just
I don't see how it doesn't. I mean, it has to.
When I think about it like that, that's not good.
No, it's I think I don't know which one you said it, but it's going to hurt every financial stock.
Yeah, there's no way.
And that's why it has no chance of passing, because there aren't going to be enough people in Congress who want to pass this that take the risk of none of your people, they all go into bankruptcy and they can't refinance their debt, which may lead to a compromise that says, like Tanner, like maybe it's 20% is the compromise, or 24. Actually, it used to be, it's not long ago. I can't recall exactly what the number, but it used to be capped at 24%.
Yeah, there's state usury laws too, but
yeah.
The
state usury laws don't apply to big banks.
Yeah, there's a lot of
loans and personal loans and all of these different products that have higher interest rates than 10%. People are just going to start putting those products on their credit card. Like, you're going to consolidate in the other direction.
But that's one of the reasons I like SoFi as an investment, because they're really bleeding off the cream of the crop from the big banks, right? And so you can charge those lower rates to the cream of the crop. You can charge 10% to me. I mean, Citigroup lets me borrow as much money as I want at 5%, right? So you can make money at 10%. Would I ever use a credit card 10%? Yeah, when I used it at 5%, I'm like, okay, well, I don't want to do this. I'll do this. I'm gonna put down 20 grand at 10% for a month, and I'll pay the $200 because it's convenience fee for me, for somebody at my level. And so you're going to have to make up all that lower interest you lost from lower income customers with higher income customers who will use it as a convenience. It's the same way that margin works for wealthy individuals. You use your margin to live on. If credit card rates were 10% or 8%, basically effectively having margin effectively outside your brokerage account, it would be used quite a bit by wealthier people. They just use it to pay the 8% or 10% or whatever for temporary things, and then pay it off when their dividends come or something else. So, but by stealing the cream of the crop is the model that works. And then at the lower end, you fill that with debit cards or secured credit cards for people in that system who want to learn. You're never going to get the people who are going to use credit poorly, like my brother did when he just says, I got all this money on my credit cards, and so I can use it, and I don't really care if I pay it back or not.
So I think this opens up a question for all of us. Is this, come Monday, the biggest taco trade that we all see coming here? That the financial names could end up seeing a hit. Prediction markets will open. There'll be a lot of different ways to play this. And if we're certain that this is not going to go through, that might be a dip buy to buy on SoFi if they're down 5%. And honestly, I think they should be down, well, yeah, probably around there. That's probably what I think will happen. But
I don't know what this. I think Trump bluffs so much. It could be down. I don't know how far it could be down, but if it goes down, let's see. So at 27.50, so $1.30 to 26.50. It doesn't really matter to me in the long run. I mean, it matters to the people who are like, oh my God, I watch the stock every day. It went down $1. Why did it go down $1? I don't really think that way, but it's not. Any hit will be temporary on that until they figure it out.
I will wager you guys money that between now 11 p.m. on Friday and when the market opens, he'll drop another major bomb, whether related to this or something else. And I would honestly take the contrarian bet that the market would even be up on Monday. Like it's not as big of a deal. Like I don't know. I don't think this is as big of a deal because everybody knows between the five of us reading the entire chat, looking through all of Twitter, like everybody knows that this is not going to pass. So like, I don't think it's going to carry a lot of weight. I understand the hedging that people are going to do and institutions are going to do, but at the same time, like this is not the first instance of people dealing with Trump making his promises, right?
Don't you wish he did this on a Tuesday so we could actually just take advantage of the after hour? Like I went to all the stocks and I was like, okay, what's happening in the markets? They're not open and it's the weekend, so I don't even get to see 24-hour trading. I was like so upset. I wanted to see the reaction.
Yeah. Okay. So as far as a reaction, I think you're right, Tanner. It's about 5%. Can you throw this up real quick, Steve? It's a little bit of a pivot, but it gives us an idea. So this is Blackstone. Really has nothing to do with what we're talking about. They had an event, a similar Trump announcement that brought them down by 5.58%. And that specifically was, well, that's not it, the $200 mortgage-backed securities. That's Trump saying that he's banning single-family home purchases by institutional investors, which is a huge hit for Blackstone. They're down 5%, and then they recovered some of it through the week. We might see something like that on a lot of these names. And in this case, I think that this is actually far less likely to happen than that announcement. So,
but more impactful.
Yes,
more impactful, but less likely to happen.
More broadly impactful, and then, I mean, Blackstone, like that's a large chunk of their business. So I don't know if it's necessarily more impactful. I'd have to look at like their revenue streams and everything. So I'm actually surprised that it only went down 5%.
Yeah, I think Tevis has a point that that Trump cries wolf enough that people will be looking at this like Tanner did, is like, this is going to be an opportunity if the stock falls. And the stock has a lot of support at 26. I've been having my buy orders in now for a week or so at 26 and below. I can't get anything executed. So, but this could temporarily take it down. It depends on how the press reacts to it, right? Because the algorithms are based on press and panic, and so we'll have to see. I'm not that concerned in the long run because I just don't think it passes.
Are you more worried about this, Tim, or the $10 a month charges on the unlimited card?
I'm just disappointed and confused about that. It's not what, in my suggestion is the smart card thing was the first kind of miscommunication. I would have had a smart card at 1% and then have the SoFi Plus one at 5% groceries or whatever, as a, so somebody can take that as an advantage and move up to that card, but still have a card that they don't have to pay for. Because at the lower levels, like my son's like, I don't want to pay $10 a month. I mean, he's like your guy's age, and he's actually went back to school, and he's working full time and going back to school. He's like, his rent's like, $2,000 a month for a single a 1-bedroom apartment. And he goes like, should I pay this, Dad, or not? I go, well, you're making $40 rewards a month, so pay the $10. But it's not, it's just it's not consistent, right? You got to have an option. Whenever you give something and take it away, like if you give this 10% interest and take it away, then people are going to start screaming. So you're better not to give it. But when you're doing a credit card system, the whole mistake with the smart card is everybody's going to compare it to a premium card because they're like, okay, this is part of SoFi Plus, this kind of premium card. That wasn't the intent. That was a miscommunication. So you can't piecemeal it. You should have said, okay, we're going to have a smart card for everybody that's no cost. It's 1% rewards. You're not getting any rewards on your debit card right now. It would be competitive with Chime, and then you can move up to this level if you pay $10 a month, and then you have this other credit card that doesn't cost anything for a person, whether it's a 2% or a 1.5% card, and then you move up to another plus where you get the same 2% card, but you get instead of 1.5%, you get 2.2% for the $10 a month. And then we're going to have a premium card that's going to have some of these characteristics, and we haven't decided what that is yet. And then people can look at it and go, oh, I want to stay in that ecosystem because it's going to get better. But if you do it piecemeal, one card at a time, all you're doing is getting flack. You're getting flack for the smart card, you're getting flack for this, and people don't understand it, you don't explain it well. People are a lot more sophisticated than you think about understanding. If these people are gaming the system, that's understandable. If they're like getting rewards, not paying them back, and you can't do it under FINRA, and you can't sue them for fraud because it's cost too much money, so you want to charge them to get rid of the cards. But that doesn't appear, I got to apologize to people because I think that's, kind of what I was told, and it doesn't appear that that's really the case. It appears there's a lot of people that just have the credit card and they're not maintaining balances, and they want $10 a month for that. They should have. There's a better way to resolve it, because nobody's going to pay just for the credit card $240 a year. It's not that type of credit card.
Yeah. We're a little past our time. It's 11:13. Steve, is this a taco trade? And then do you want to wrap this for us?
I mean, we can go as long as you guys want.
I think that's
and on the taco trade part. What do you think, Steve?
About what, Tanner?
Are you thinking that this is not going to go through and that you would prefer to buy SoFi on a potential dip if the market overreacts to this news?
I want to see what comes out over the weekend, because I do think Tim's right. We saw it with tariffs. We've seen it with pretty much everything with him. The problem I have with this is this could be a big overreaction and just be an overhang into earnings. This is probably going to be short-term pain. I just don't know if this could actually get passed. And I have to think about it from a risk-reward standpoint now. Does this become a black cloud for a week, a month, a year? I don't know. And There's just a lot of good opportunities out there, and I'm kind of in my mind thinking about what I need to do. I don't have an answer.
Spell it out for us. RESP or is it SELL? The whole position?
I don't have enough information now, but this is something where the algorithms can get a hold of it. This
Jesus
is something
Christ.
where
You work in politics, bro. Holy crap. Say yes or no.
I don't know. I don't have enough information.
It is kind of hard to say, right? I mean,
Very hard.
if it's a 5% hit, I wouldn't really worry about it. I probably don't know if I'd buy the dip if it goes to 20 from 27.40 or whatever it closed today to 26.70 or something like that. It's just that's been doing this for like a couple of weeks, and you're going to have a run up into earnings. But if it gets serious, where like you can't predict. I mean, what Steve's saying is you can't predict the future, right? If they come and they say the whole Mike Johnson and all the Republican caucus say, yeah, we're going to get on this at this 10%, and then Bernie Sanders is going to say this has to be permanent, not 1 year and stuff like that. It's going to be a hit. And then the question is, how much risk does that create? And would I rather be in BMNR with all this money because it has the same risk, but maybe a potentially bigger return? You never know, but it's going to hurt the financial industry really a lot.
And even if underlying numbers for SoFi don't get hit, it will likely get caught up with the narrative. Right. And I just don't know how long that would be. And as Tim said, let's say that it goes through and then it stays like that, and then you get a shift in 2028/29. Does this become permanent? And then there's just a lot of things to think about with this. I wouldn't be concerned if SoFi fell to 23.24 and that's where it stopped. The problem is if it falls to 23.24, you have a very big likelihood of the algos getting a hold of this and just going lower. I think what's more important than what Trump tweets this weekend will be what JP Morgan, Citigroup, and Bank of America say next week on their earnings calls, because they have to address this.
I also hear that Tim Sweeney, the CEO of Epic Games, just said that BMNR has the same risk as SoFi.
I'm not the CEO of Epic Games. I get that.
You should Google it. It looks.
I get that a lot, though. By the way, I even had a chat with him about it. I said, and he's like, well, it's a pretty common name, but I don't think it has the same risk as BMNR. I was trying to exaggerate to make a point, and the point is, if this becomes a permanent solution that is 10% limit, it's going to affect. Like Steve said, you don't know how long it's going to affect, but it changes the risk factor substantially, I think.
They're kind of diluting at the same pace, though, right?
Tanner's not the troublemaker, right?
They're not asking for 50 billion shares, so I'll say that.
I don't think all this dilution is. I think that's water under the bridge. You get to, when you're a growing company, you're going to get dilution, and the question is are you look? Well, see, here's the thing. If you get dilution and you have all these growth prospects and you're going to move on all these fronts and you have lower risk in the businesses you already have and they're a base, if you take away that risk in that base, then the dilution matters more because you don't know how you're going to use that money. But they have so many catalysts this year. This is kind of an unfortunate thing by Trump, but this is Trump. This is classic Trump, right? He's just trying to respond for the. But that's the problem you have is like what I always say, depending on macro and depending on what Trump does, because you never know what he's going to do to screw the situation up, right?
Yeah.
So, but it's usually it's just never going to pass. I mean, Bernie Sanders would say, "Oh, you limited all 10%. These people making too much money, and then we'll force them to give credit at 10%." Well, he isn't going to go on the hook and give anybody credit for 10%. It just doesn't work. It's not workable. I think, somebody said Bill Ackman came out with a post. He probably is totally against it. Wall Street has a lot of money. Wall Street gives a lot of money, and a lot of people in Congress. There's enough people in Congress that listen to Wall Street's money that this won't pass, in my opinion.
Yeah.
In my mind, I think the thing that I have to think about is if SoFi falls, it could fall further than 10%. I don't think that dip is going to last necessarily, although this is a lot more serious. And Blackstone, by the way, is wrong. They said about 2% of their real estate portfolio is, but they fell, 5%. Defense stocks got hit as well from another Trump announcement. They fell about 5%. If you look at Lockheed Martin, somebody mentioned this in the comments. It's up at, well past where it fell. So in my mind, any dip that comes from this is going to be short-lived. Now, it may take longer than a week. It may take multiple weeks. But if I'm looking 5 to 10 years out, I don't think it's going to happen. I may want to think about adding. So I'm going to have to think about that. And also ramifications, if it does pass in a very unlikely scenario, what that would mean as far as SoFi investment and my other investments.
Well, here's the point. If it passes, it hurts Chase, Bank of America, and Wells in their business a lot harder than it hits SoFi. Because the differential rate between 30% and 10% is 20%. The differential rate between their SoFi's personal loans of like 12% versus 10% isn't the same. So, but everything's going to get worse down the river at the same time. But if that happens,
I think it's more along the lines that you don't have to play this sector at all. And I saw I saw 1,000 comments say like, "Hey, why are you guys talking about this hypothetical?" It's like, that's what understanding a risk is. Like, I want to make sure that if this does go through, or if there's more talk of this happening, that I get out in time if it poses a big threat. I wanted to come and talk to my other very good investors about, does this pose a threat to SoFi? And if it does, you better act accordingly.
Yeah, I think since it doesn't pass, I don't think it's a long-term threat. But you never know with markets.
We don't know we're also making assumptions that it doesn't.
Yeah, I know. But everything you do in life is a bet, right?
Yeah.
You're never 100% sure. I went through this when we were doing when I was a young lawyer. We had information on mergers and acquisitions, and half the time you'd guess. You have all the information. You guess what it would do to the stock, and half the time you're wrong, right? Because you never have perfect information or what people are going to do. But I don't think it's like, oh, I'm going to bail out on my position at this point. It's not even close to that. But it's you just got to watch what happens with Congress. Besides, they've been doing this for years for the 10% stuff. This is not old news, and it's like, okay, but now he's in favor of it. But it never had a chance of going through before. It's not going to have a chance of going through now, and it's but it might stimulate a lot of talk, and they might say 22%, but because 33% is ridiculous. It's ridiculous. They can make money at 22% or 24%. Like it used to be 24%. They just changed it. Or I don't know when they changed it, but I recall vividly that it used to be a max, and everybody was at 24%.
Tim, let me ask you this. How could this get passed? Like, what do they actually have to do?
Slit their throats. But you can't count on Congress not to slit their own throats, right? Because I've been on record. I've been posting some political stuff lately, and I don't really like to do it. But I'm so irritated with the stupidity level of everybody in our Congress that it just irritates the crap out of me. And I always thought about getting off of X, because it's just these people are so stupid, it's unbelievable. But you're going to have a push by the progressives to say, oh yeah, let's do this. And so that's and then part of the Democratic, I think you get 70% of the Democratic Party would do it, and 30% would be sensible not that it's going to kill their own constituencies. And I don't know what the Republicans going to do, but I don't think they go along with this. But I think Trump's bluffing. I don't think Trump's going to go and start lobbying everybody in Congress and Thune and Johnson and everything to get this passed at 10%. There might be talks and discussions. It'll linger over his stuff, but
But even if it's 20%, even if it's a negotiating tactic to meet in the middle somewhere, just to get it lower from what everybody considers as predatory rates, this could theoretically pass from the executive branches if all three vote on this.
Right. If they went to 20 to 24%, or they're probably more likely to go back to the 20. If they went to a 24% cap, I think that's bullish for SoFi.
Or it could be, Tim, we mentioned this, that tied to a multiple of the Fed funds rate.
Yeah, the whole problem with everything nowadays versus like, 70s and 80s and like, college loans and stuff like that is just, it's just the concept of letting people charge whatever they want, going over that 24%, allowing rates to be, oops, I'm going to low on charge. If you lose me, I lost my charge. I don't have my charger with me, but it's probably not a good thing if they keep them at 33%, and it's probably, for the major banks will take a hit if it's 24%, like Steve said. But I just don't think that they'll do anything. Tell you the truth.
Yeah. Do we want to do the after hours on here and just talk a little bit about other stocks?
Yeah, we could.
I'm fine. Yeah, with that. Yeah, to start the new year.
Yeah, that's it.
Steve, what have you been looking into this week?
I may be starting a new position. Well, all right, I'll say that. I'm probably going to start a new position Monday or Tuesday in Zeta. I've now listened to two earnings calls and the fireside and re-looked at things, and I'm getting very bullish on Zeta. I wasn't bullish in the beginning, and now it just looks like a very big long-term opportunity. I didn't realize that they beat and raised for 17 quarters. I think hearing the CEO speak about what they went through and the fact that he went in when they were making 50 million in EBITDA and telling the board that they're going to make no money for 2 or 3 years, they're going to retest 400 engineers and rebuild everything. And the fact that for every dollar spent from their customers, they make, not Zeta, but their customers make 6 or 7. This could be the future of marketing. So I'm really interested in it.
What does Zeta do?
We don't have time for all that.
They're like an AI-powered marketing automation platform.
I, for real, am asking every Zeta holder. I've never gotten an answer.
So Tanner, what we're probably going to do is we're probably going to do a stock tank on Zeta. I'm reaching out to the guy. Apparently, there's just like one YouTuber guy who's like a Zeta, like all he talks about is Zeta, and we're going to get him to pitch it to us.
Love it.
And then Matt and I have a stock challenge we're starting on Monday.
Nice.
So,
Go ahead.
Who next, Tanner?
What I'm looking into this week?
Yeah, how about you go next?
Nvidia. I went to the Nvidia conference at CES.
Yeah.
And I could not be more pleased with this company. Like, I think as long as they continue to make big step changes in the performance of their GPUs, then there are going to be larger buyers. I don't think that there will be, $60 billion, $50 billion data centers set up for a new chip that's 15, 20% more efficient than the last version. But there will be if it's 5x, 10x, 15x more efficient. And that's still where we are with Vera Rubin. So I'm head over heels with this name right now. I know Steve doesn't believe that it's going to be above 250. I know Amit.
he said he didn't have a charge.
Yeah. Geez, the Duckhammer gifting 10 Crossroads subs.
Love that.
Insane.
Thank
You
you,
got to
man.
put that up on chat. That's crazy.
Yeah.
Or up on screen. The
And he
Duckhammer
subscribed
is
as
a legend. He literally put together our entire fintech ranking. He's a gem.
Yeah, awesome.
But oh, sorry. If I could just really quick,
please.
if the company is going to get that $500 billion worth of revenue runway that they believe they can see in the next 5 quarters, then all of Wall Street is significantly undervaluing how fast they're going to continue to grow. Not only that, if we believe that the company is only going to grow by 10%, 20%, 30% next year, then that level of growth that even Wall Street's expecting is massively margin compressive. Not margin compressive, multiple compressive. The company's going to get a lot cheaper because they're going to grow faster than what people are expecting the stock to actually do.
Well, what's
Um,
crazy, Tanner, is like even with if analysts are low on their expectations, and I think that they are, it's trading really cheaply. Like a lot, I hear people say it's expensive, and I think they're just looking maybe at the share price or the market cap. They're not looking at PE. They're not looking at forward PE. They're not looking at PEG ratios and so forth. And there's a lot of ways you can value this company, but it's like, man, I there's two companies that I'll give an answer to, above Nvidia, but Nvidia is like number 3 on. I need to get more shares of this. The stock has gone nowhere, but guys, I know there's frustration with this, but when the stock goes nowhere, but the company is doing this sort of thing, that's a time to get really interested and say, okay, maybe I should get more of this.
Dude, the duck hammer is going crazy, Steve. You got to be putting these on screen. This guy's going out of his mind right now.
So are you buying more in Nvidia then?
I can't.
Yeah.
I can't. It's too much of my portfolio, but I'm just buying all the proxy names. So my big buy right now is Nebius.
Oh yeah, bro.
A little bit of Nebius, yeah.
So is that then why the name switch? Is that the case for you guys? Or never mind. Okay, Tevis.
What's the
Is
question?
Nebius the one that you're buying then? Or what are you like looking at and looking into right now?
Well, like I said earlier tonight, I'm going to buy a little bit more air this week. Nebius, I'm fully built out on Nebius. Although I've been doing more cash secured puts in the money, of course. And I think that's it for me for this week. Yeah. Oh, I also want to buy some more Meta. So TBD on that one.
Yeah.
For
Meta's
me,
gonna
I've been
be
buying hand over fist VG, and I think they're very well positioned. It's moved for me beyond an invest and investigate, so I'll be buying it probably for a good while. And then the other one, which I don't use margin other than the free $1,000 that Robinhood gives. And one other time I need to use it for like a minute, but I went on margin. I have money coming in, so it's only the amount that I have coming in to buy the dip on Air, which had earnings this week. I bought it at 21 something, and I'm like, it's up in the 26s already. It rebounded. A lot of it is not going to go long into this, and we need to do a stock tank at some point. But that's a picks and shovels play right there in the AI space. And the comments of the CEO on bookings that they expect in the second half, this is after May, it's like a 10x at least from where current bookings are, which is like insane. What this basically implies, and the way the comments are, is that they've landed a major hyperscaler for their Sonoma systems. And so that's a massive, massive revenue ramp. And I think it's the first of many.
What's it called? Yeah, VG's interesting. I don't know if it's worth my dollars. I don't know anything about the industry, and I don't want to get caught with new information that, I'd be ringing Matt Money's phone every day that the stock is up or down. So, not my forte, but
yeah, and that's fair. Like I've done that many times with other companies where I'm like, I think it's good. I just don't understand that space sector, and I don't want to devote brain space to it necessarily. But I wanted to energy exposure, and VG I thought was a good opportunity there. They're interesting. So I'm hoping to have Matt Money on some point, and we can discuss VG, and I can pick his brain a lot, which I've been doing outside of YouTube as well. But yeah. Or Steve,
people are saying, what's the ticker? It's VG Venture Global.
Yeah. And then AEHR for Air Test Systems.
Yeah. They're liquid natural gas play.
Yeah. Very vertically integrated. Oh, yeah. QXO is mentioned there too. Steve, you gave me QXO this year, and something is wrong with it. Like, it's a weird color in my SoFi Invest portfolio. It's like green. What's with that?
I'm trying to make up for previous years.
It's a good gift. Right now, out of all the gifts we've given, all but one are up. Now it's way too early to read anything into any of this.
Don't
But yeah,
expect it
crypto
to
is leading the
break
way.
out hard to the upside.
Yeah.
Hard.
Dude, I'm up. I'm up 10%. Honestly, I think we should sell now.
Wait, you bought QXO also?
No, I'm up on Peloton, up over 10%.
Hell yeah, buddy.
Which one is the one that's not up? Remind me of that, Tanner.
For real, I don't even know what I gave as a gift.
So
I don't
Tevis,
even know
I have a
who I gave
question.
it to, and I don't know what it is.
Tevis, you were in the chat when Matt and I were
Reload.
discussing it. I don't know if Roy and Tanner know what we're doing, but what did you think of Matt and I's idea that we're going to start?
Bro, you, my friend, are a really funny guy. You're just a funny guy.
Why?
I counted. I was having dinner and I counted. I think you gave like 7 different disclaimers. We're not financial advisors. This is money we can afford to lose. We're doing a challenge for ourselves. This is risky business, and we're doing 10K challenge. And please don't follow our trades. And this, and then after 20 minutes of fucking disclaimers, this guy goes, "I think I'm going to put half of it in Mag 7." And I'm just like flipping my table over here, like, what? How is that risky?
So Matt and I are doing 10K challenge. We don't know what we're betting on it, dinner and something else, but it's who can outperform over the year. And I think I'm going to do half in Mag 7 and then half in cash secured puts on. It was going to be SoFi and Zeta. I don't know if it's going to be SoFi anymore. May end up being BMNR and Zeta to start out with, and then run the wheel on them. We'll see.
So one name that we've not mentioned, and I don't think any of us are in, maybe Steve is, but Tevis and I just discussed this at the Bootleg Weekly, was Nike. Nike's getting insider buys. Tim Cook is buying. They would hugely benefit if the tariffs are repealed. And they launched this neuroscience Nike Mind? No,
Nike Mind, yeah.
Nike Mind. And they look weird. Sold out instantly on day one, which is frankly what a product like that should do. So too early to read much into it. We look at social interest. Nike is way up on that as well. Do you think Nike is worth a look?
It can catch a bid, but the reality with Nike is it's a shitty space. I mean, there's so much competition. There's competition at every angle with them, from sneakers to clothing to sports and sporting equipment. So can it catch a bid? Sure. But I think there's easier ways to make money out there.
The idea is, well, there's competition in every space that it's worth having competition, Steve. But the idea is that it's so beat down that buying here in the 60s, you're going to find value if and when it does catch a bid.
Yeah, but where's it going back to? 80, 90? I mean,
all right, I'll take 90. It's
I'm just saying, realistically, you can probably get that out of some bigger tech names also.
I get that.
But competition.
I have a conflict of interest with Nike. I don't like any of their products. They all suck. And I'm a fan of the brand with the 3 stripes. So I cannot, unfortunately, I'm out. And also I've recently just bought some trail running shoes for myself, and they were Hoka's. So I've got no business with Nike. They've got too many competitors right now.
Speaking of Hoka's, On Running has been doing really well. And I owned them for a little while and very bullish on Running. I owned the product and the stock for a while. They've been doing very well. ON is the ticker symbol.
Yeah, I mean,
I really like it, the After Hours show. Come on now.
If I wanted to go dumpster diving, I'd probably go with Disney. I re-looked at it, even though I hate the company. It looks more interesting than Nike.
If I was actually going dumpster diving, like truly going dumpster diving, I'd make sure to wear Nike shoes. The Nikes are for lawn mowing. That's what they're for.
Wow.
I mean, I do like Adidas better. That's just mine.
Really?
Yeah. I think they're more comfortable.
Yeah, Adidas has got the shoes on point. Honestly, I think the greatest shoe ever made, ever, and I'm not joking, is a Stan Smith, and
I don't even
that's
know what
Adidas.
that is.
And
It's just a white shoe. It's the standard tennis white shoe. It goes with everything. You can wear it everywhere. You can wear it to a wedding. You can wear it
All right.
out.
Anyway,
tennis shoes to a wedding.
I mean, you could put a sports coat and Stan Smiths on.
the only way that you could wear a tennis shoe to a wedding is if you're wearing a friggin' linen jacket.
Yeah, I'm not actually wearing those. I'm just saying it's a
Good luck.
versatile shoe, and Adidas makes a lot of money on them.
Good luck.
So have you guys actually looked into Zeta at all or not?
Yeah, I looked into them when they were in the mid-teens because Elijah was big on them. He asked me to look into them. I looked into them. I didn't buy because I'm a freaking idiot, and now they're at like $30.
At 24.
Yeah.
But the forward growth resembles some companies that we've been in. And the numbers are quite compelling. I need to do more research on it, but it is getting very interesting to me.
Yeah. You should look into a company called Nebius.
I own
No more
that.
dumpster. This is how we all get hurt, is we all try to find these new companies that we,
Here, Steve,
new
can you
industries,
share my
all these
screen?
things. What?
But I'm in Nebius.
Tanner, how does that trend look to you?
Looks great. I've got no problems with the company. No one knows what they do.
It's a digital marketing company.
They're a marketing company.
Yeah, but what gives them the edge versus their competitors? How do you know what happened to the trade desk won't happen to them?
Well, that was actually, if you can throw this up, Steve, kind of a similar question of, so these are the top 10 worst performing stocks, and you can see right up there, the trade desk is number one. Tevis and I had a little segment where we discussed these plus PayPal and Nike, which performed terribly and almost made this list too. Like if you were forced to hold one of these for a year, a year is not very long, but like which one would you do? And the tough thing is I almost want to say the trade desk just because it's down so much. Advertising should do well in midterms. Jeff Green is a great CEO, but like I don't really fully know what happened there.
Their product got not commoditized, but their other competitors got really strong. And that's the problem. I'd rather just have a more consumer-facing company where I see the changes happen in real time. Like, why own Trade Desk or Zeta or any of these? Own Meta. I like that name.
So if you had to own one of these or PayPal or Nike and hold it for a year, which would you do?
Watching Big Fiserv because it's his like bread and butter.
You know what's so funny is like out of these names, the company that I do know best out of all of these is the Trade Desk, which is hilarious. So if I had to pick one of these, it might literally be that name, but I still don't hold it. Like I'm not buying it here.
At today's levels,
It's expensive.
so there's one company on there at today's levels that I would probably buy.
Which one?
I'll let you take one guess. You should be able to pick, every one of you should be able to pick out exactly what it is.
Which is the most boomer out of all of these?
Dow.
Yeah.
Oh, yeah. That's a steep pick.
That-
Is that right?
It's not, and I'm actually annoyed that you guys picked
Is it
that.
Decker Brands?
Is it FactSet?
Yeah, I was thinking FactSet.
Alexandria Real Estate.
Okay.
Pretty freaking.
And the reason is,
Yeah.
I think that they got hit because they specialize in biotech companies or providing life science centers for biotech companies. They still have a 5.5% dividend. It's come down a little bit, but it looks like the shares are tapering off. And at $53.97 a share, the book value is $97.68. Now, I don't know how much that book value is going to fall in the next quarter, even if it falls to 70 because of dispositions and stuff. It's still trading at a discount to book.
One other related S&P question, and we can cap it right after that, or we can go longer. Either way, I'm good. There is a stock in the S&P 500 up nearly 60% year to date. Name that stock.
SanDisk.
I guess you knew it. But yes, yeah, SanDisk.
Insane.
The only reason why I knew that, because I'm not in that company, I'm not tracking it. I know some of it because it benefits Air, what's happening in that space. I was looking, I was like, well, maybe I can find that list that Fiscal AI had put. And so that loaded, I'm like, oh, I guess I'm already in that year. Wait a minute. They gained more than 58, but that's year to date so far. My goodness. Curious if anyone in the comments is actually in that, but man, that's hard to chase. But yeah, Micron is up 20%. Intel is up 23. It's Applied Materials also.
Whenever I was at the analyst Q&A with Jensen Huang, he suggested that they might need to get into the memory space. So
yeah. Oh,
unfortunately, I'm out.
Did he give you any other goodies?
He believes that soon they're going to be the biggest CPU company in the world.
No, I mean goodies that we can invest in, Tanner.
Well, related
Jensen
to that,
said to invest in?
Yeah, well, no, I mean, like, anyways, I'm just making an MNBI joke.
Yeah, no.
So related to that comment, correct me if wrong, Tanner, but the biggest driver of that is they need more, that they're not able to produce enough for Nvidia, and also the quality that's been verified and tested. And you know what company really freaking benefits from this? Air Test Systems.
I was going to say Air Test Systems.
and literally, okay, so 2 quarters ago, and I didn't listen, I wish I did, Gain Erickson was talking about this exact thing happening with DRAM and HBD, this massive demand that's happening there, and how basically what's happening in that space. At the time, Micron was trading much lower. I made comments. A quarter later, I'm like, I need to really look into Micron. Micron just freaking took off. He's making similar comments as well. I mean, he knows the space so well. But he mentioned it in this specific earnings call. He's like, okay, these guys, actually analysts were asking about this, Larry Chibata. But he asked and he said, why are these guys not like switching over? Like, what's going on in the space? What are you seeing? What are you hearing from them as well? He's like, okay, they are not able to make enough. And one of the major choke points is being able to test because they need to have high degree or a very low failure rate. They're only able to do that with multiple touchdowns for the most part. They're testing either individual dies or the package part level as well, which is inefficient, wasteful, slow. And Air Test Systems is sitting over here. It's like, dude, wafer level. It's cheaper. You can get a whole lot more throughput, and you can do multiple touchdowns for even less money than you're spending on your current system to be able to get an even lower failure rate. It's there. Long sell cycle, and that's not even like the third most exciting thing with Air Test Systems. But sorry, I'm just
I love it. I love it. It's making me want to listen to like a fireside after this.
That's not the third most exciting thing. I think the first and the second is like, the second is the CEO's name sounds like he fucking crushes Mountain Dews and has a mullet. And the first is that Roy is actually really freaking passionate about this stock. I haven't seen my guys so fired up in quite a while. So also, Tanner, Roy is going to do a stock tank for us on Air Test Systems.
There you go.
Yeah.
Yeah. No, I'm excited. I'm excited. The other tiny like small cap name that I've just started looking into is One Stop Systems because of Stock Talk. So I'm going to find out if that's a cool name. Essentially, they set up data centers in extremely rugged conditions. So, you know, where data centers would usually be set up in these highly controlled, clean warehouses, these would be set up on airplanes, cruise ships, battle cruisers, potentially tiny ones for inference on tanks and trucks, at like huge rigs out on mountains and stuff like this. And the contracts are not big enough for an Oracle or some of these big companies to care about, but they are large enough where, maybe every air traffic control or military base or something like this would need a ruggedized data center or on like I don't know. It's pretty cool.
That actually sounds really interesting. That's OSS, is that right?
Edge compute is what they're doing.
Is there? I know nothing about them other than what you said. Is this one of those that if there are actual data centers being built in the space that you think might benefit, or are you too like new in that you don't really
say that? I didn't hear you.
So a month or two ago, there was a lot of talk about data centers in space. It's a little bit different, but basically, black box radiation helps, or black body radiation helps make that even possible. I'm curious if OSS would be one of the big beneficiaries if there is a move for data centers in space.
Yeah, I'm not sure. I'm not sure. I just know that they've gotten a few smaller DoD contracts, and there's potential for that, and as well, they used to have a subsidiary of their business that would set up traditional warehouses, and which was actually their biggest revenue driver. Was setting up traditional warehouses. They just sold that subsidiary and then raised guidance on revenue. So they see something in 2026 that is whole focused on edge compute, and they're no longer doing regular data centers. So I'm pretty interested in it. Like, yeah. Anyway, it's all just thought right now. I'm thinking about it, but remember, this is a $200 million company, and OSS as well. Here, wait, let me bring this up.
Man, that is microcap.
Yeah, and
not billion, million.
They fly, bro. Like 3 days ago, they were a $6.50 stock. Then the next day, they were $7.90. Then the next day they ended at $9. Then the next day they ended at $8. They are going up and down by 20%, down 10. Like they're just extremely volatile. Look at Tevis, his eyes are opening. I wonder if they have an options chain. He's like,
bro, you freaking read my mind. I was literally just looking that up.
I know. I like.
Yeah, I'm guessing there's not much of a chain if there is anyone, but that's. Yeah, that's right up Tevis's alley. And honestly, like the micro caps, air I'm bringing up to 10% allocation. Micro caps are usually a lot more fun when they're like a very small percent of your portfolio, because they can still absolutely drive insane gains. But then if things don't work out, you've lost a couple of percent.
Yeah. So Stock Talk is the main guy that's on this name, and even he, I think, is only in this name in common shares. He understands that it is risky, but yeah. I spent like 12 hours with that dude. He's changed my mind on investing. Like, I've got stories to tell you guys. This dude is, anyway. That's it.
So how do you change your mind on investing?
Just the way that he looks at thematic plays, like the way that he enters into names, uses technicals, the things that I had, not considered or thought that as a long-term investor, this would, not be for me. But he is extremely research-driven, while also looking into not only option strategies, but also technicals to find good entries. And I don't know. I think that there could be some cool plays that he had talked about that I think are interesting, like on-device chips, think Qualcomm, stuff like that. Edge compute like OSS, and everyone's looking at some of these neo-cloud names, but they might even be crowded spaces already. But a name like OSS, not so much.
I mean, OSS being in the defense sector is interesting.
Yeah. And they were at CES, so we were able to meet with the company and everything. They seemed legit, like they were nice people. So, I don't know. lot to think about though. I don't like like the problem is that whenever you go and you look at these companies like OSS, you'll see a lot of their quarterly earnings have been down. Like it's not a clear cut play. And he's, you know, a lot of what I've done is I'm finding these trends of these companies like SoFi doesn't miss, you know, so for me, it's so easy to model out. You're just, okay, where are they going to be 5 years from now if they continue to just grow? And then I sort of bang my head on that wall until the market ends up seeing that thesis from, you know, $14 whenever I started to whenever I really entered at 9 all the way down to 4. But that's painful. You know, Stock Talk was trying to show me that there's indicators on trading averages that would have shown me that that was a terrible idea to begin with. And so he's not getting into, you know, Bollinger Bands or Fibonacci sequences or anything like this. It's just moving averages and volume. That's it. And he said, that's all I have to worry about. I can do that. So I'm going to start looking into some of the themes that he liked, some of the ways that he trades to look better for entries. You know, being a little bit quicker. Like I think Shift 4, sometimes I question my own judgment and I look at a name like Shift 4 and Jared Isaacman left, which is a massive red flag. Like in my sort of investing thesis, I look at founders as an extreme part of my investing thesis. But then whenever he left, which he didn't fully leave, I didn't make an action. I didn't buy, I didn't sell. I just watched it happen. And that had costed me, you know, and I really do like that name now, but I could have re-entered now. So, I don't know. I'm just trying to, you know, make me be the best investor that I can be.
It's really interesting seeing the evolution of Tanner, like going from, you know, buy and hold, never sell, you know, Warren Buffett-esque to, can I run the wheel on this? To now being like, oh, well, I should swing trade in and out based on sentiment changes and catalysts and whatnot.
Not swing trade, just look for better entries and you know, act on serious red flags. Like this one that we just saw with the Trump thing. Like, I don't think this time around I'm just going to ram my head into the wall for a full year of watching SoFi and the rest of the financials get beat up if that does come to fruition. If there's a year of credit cards, I know the math here. So I would be wrong to think that everything's going to be fine because I found a winning company. A winning company in a wrong sector is a wrong trade. Like, so, yeah.
So what you're saying is you would consider getting out of SoFi.
Yeah, for the year, yeah. Yeah, if that happens, if it actually goes through. And then if somehow halfway through it ends up changing, I'd re-enter same day.
I think even if it goes through, SoFi's higher a year from now.
Maybe.
The underpinning is just the assumption that personal loans is going to get hit disproportionately, but they have so much other stuff going on. And if personal loans doesn't get hit, then that's just a bad call.
Maybe.
But it's not like you're not trading in a vacuum, right? You can reallocate that money into Nvidia or something else, and so I get that perspective.
Yeah. Even with like Tesla, I said whenever I sold that company, if it was Tesla or cash, I would have just held Tesla. But if it's Tesla or Nvidia, I have to buy this. Like, I prefer Nvidia. But yeah. So I don't know, man. Sometimes I do, like, what I need to realize, you know, whenever you're talking with someone and you're like, did I live my life wrong? You know?
No.
maybe not you, but as I was listening to him,
Not
I'm
enough
like,
people.
I don't want to be thinking that I'm so smart that this old dog doesn't learn new tricks, you know? And same with covered calls and how dismissive I was about, new strategies that I didn't learn because Warren Buffett didn't teach them to me. I can learn technicals and different ways to enter into trades and all of these things without compromising on my morals of buying and holding my flowers and cutting my weeds. I think that's a fair thing. I don't know.
Yeah, I was curious how far that shift with Stock Talk brought you. Where if you start buying Palantir, I'll believe that there's been a you're not the same Tanner that aliens have adopted you.
Me and him were like this on Palantir. The
Oh,
most
yeah?
overvalued, untouchable company that the stock market could ever give us. Not because the product's there, but because the valuation is too expensive.
It's incredibly overvalued, but don't bet against it.
Yeah, I'm not.
Can't bet against it.
But yeah, dude, I wish you guys were at Vegas because you know what? Sitting in a room with Amit and Stock Talk and, myself and all, like there was like a collection of guys that were all there. And I'm like looking around, I'm like, all these guys are phenomenal investors, like all of them. And all day, that's all we were talking about because it's like actually our passions, It was a great feeling. Not only that, but like, I don't know. It was a good time. I had a great time.
What did you think of Nvidia's server when you saw it on stage?
Dude, I saw one like this.
No, that's what I'm saying. I mean,
it's crazy.
I don't own enough of it.
Yeah. I don't know. I'm very much a fan of the new Vera Rubin platform. Not only that, but like the time it takes to set up, the efficiencies on the cooling.
Dude,
how much less it costs.
The whole cooling thing is insane on it.
Yeah. So you don't necessarily even need to wait for these energy companies to fill some of these gaps. The GPUs are going to get more efficient, more energy efficient. So
what can it run on? 45C, I think he said.
Well, that's what I thought. And then one person roasted me. My understanding was but I'm also Canadian, so maybe I had a geographical bias. My understanding was that essentially these things run on hot water.
That's what he said, 45C though.
But why would he say 45C in an American audience?
I have no idea.
So my understanding was he said 45 Celsius, but people are saying that it's 45 Fahrenheit, which would also make sense. But he also said you don't need a chiller. But just even to get to 45, you would still need to chill the water or the solution. So but I got roasted by literally one comment and it made me rethink it. Because even to me, I'm like, well, that does, 45 degrees Celsius is hot.
I mean, it is what he said, so I don't know.
All right, I'm toast.
Okay. Thanks, guys.
All right, everyone. I guess we're going to call it here. Thank you for joining us. We'll see you next week.
Thanks, y'all. Bye.
Bye, guys.
Everyone later.